Hello, please take note. This presentation is meant for people who qualify as wholesale investors under the Corporations Act. Would you like access to an asset class with a total addressable market of 1.2 trillion US, growing to 1.9 trillion US over the next few short years? My name is Steve Baxter, and this is Beaton Zone Venture Partners Fund Number 1. You will all be aware of the global insecurity present in the news every day. If it is not the Russian invasion of Ukraine, it's the ever-present but escalating confrontations in the Middle East. We recently experienced the mass supply chain issues around COVID and have now seen the extensive globalised world trade. It seems when things go wrong, countries will look after themselves first. Defence technology spending has been exceptionally inefficient over the last 20 years. Despite this, there has been some amazing products rise to the surface. Previously, most defence technology innovation was funded via non-dilutive Defence Department grants, was besieged by limited funding, and wrought by perceptions of ESG. Other than funding from founders, family and friends, there's been very little early-stage equity in defence technology. Beaton Zone is a first mover. As an investor, my job is to buy low and sell high. As such, we're always on the lookout for assets where other investors fear to tread, where, for whatever reason, they do not attract the flood of capital that sees values bid too high. Beaton Zone is about businesses in the lethality and survivability area of defence technology, where lethality means investing in things that soldiers, sailors and airmen need to do their ultimate job. Not that we ever want that to happen. And survivability is about the things that allow the Allied forces to withstand the opposition's lethality. We do this because very few other investors will consider an opportunity in this sphere, where the perception of the capability it brings drives investors away. So we are raising an ES-VCLP fund, and we are conditionally approved to invest in sovereign Australian defence technology that has applicability in the allied market, that being the $1.2 trillion and growing market, not the $32 billion Australian market. Being ES-VCLP, we can also invest up to 20% in non-sovereign opportunities, and we're deploying capital to ensure the best strategic outcome for the Beaton Zone portfolio. The businesses we invest in need to have a material military application. Our view is that these opportunities have a discount applied to their valuation due to their inherent lethality, and that over time, as the technology in them widens to have more civil appeal, this discount for lethality will diminish, thereby increasing the return for the fund. I'm the lead investor and CEO and have a background investing in early stage technology businesses in Australia. My track record to date has returned 29% cash on cash to my family. Examples of the businesses and exits I've achieved are represented here. Please feel free to pause and go through them. I started this journey over a year ago and built an amazing team, including 2 analysts and a deal scout. I've also a great set of advisors along to assist. These people range from ex-special forces operators to aerospace engineers and production experts as well. The Australian defence budget in US dollar terms is $32 billion. We are chasing an allied market worth $1.2 trillion, growing to $1.9 trillion. The allied market is NATO, AUKUS, Five Eyes, the Quad, and other friendly, sometimes non-aligned nations. The world is currently racing to close many technology and production gaps, where recent conflicts have delivered exposure thanks to rapid combat innovation. The spending on innovation across the allied sphere is growing. Overseas, DARPA and DONA are well funded. In Australia, the Advanced Strategic Capabilities Accelerator, the Guided Weapons and Explosive Ordnance Enterprise, and even the National Reconstruction Fund all have allocations for defence technology. Beaton Zone is a first mover. We will fund things that most other investors and no structured fund dare goes near. Less investors at the table means better valuations. Culminating with the depressed macro environment for tech startup investing, the confounding factor of AI rapidly changing the business landscape. This allows for a greater countercyclical approach with a capital allocation to the defence technology asset class. There are many tailwinds that are propping up this sector and seeing expenditures grow. The Middle East and Ukraine conflict and other tensions in the regions. The ever-present threat of China miscalculating over Taiwan. The AUKUS program will spend $330 billion on submarines and a further $40 billion on other advanced military technologies. This will lead to an influx of talent and people into the sector that will provide a wellspring of future entrepreneurs. If Australia is to operate and build US nuclear submarines, then the current restrictive practices of ITAR, which limits how and who can work on US-centric defence tech, will be and is in the process of being liberalised between the AUKUS nations. This is a good thing and will lead to many efficiencies. We are raising a $60 million fund with a first close at $10 million. We are targeting a 20% IRR given historical M&A, whilst noting that the recent influx of venture capital into this sector in the US is seeing M&A move from PE-led to more speculative venture-led activity. We will be investing in rounds between seed and good value Series A. We invest in companies with immediate applicability to the allied market. As for portfolio construction, there are 5 domains in defence: sea, air, land, space, and cyber. We also view our pipeline through the lens of software and hardware, given the different return profiles of those verticals. For the most part, we will invest across all domains, but given how dual use the cyber domain is, we're not actively scouting for deals in this area, but would not do a deal if one presented. For the most part, valuations in this area are too high for our thesis. It is worth noting that electronic warfare is not the cyber domain. We are hard at work. We've been networked well into the Australian defence innovation scene for some time and have an active pipeline of opportunities. We're a first-in-class funder with no ESG hang-ups. We're across the entire defence technology landscape through deep relationships and networks. We've assembled a great team with decades of experience in conducting early-stage investments, and we are not waiting. Despite not reaching first close, we've warehoused 2 deals. One in the space sector, HO Robotics, a company that allows the imaging of spacecraft from other spacecraft. Based out of Sydney, Will and HJ have built an amazing business. We've co-invested alongside Incutel, which is the Central Intelligence Agency's venture fund, as well as Airtree and other local investors. Our second deal, Arus, a cutting-edge sensor company out of Melbourne, building sensors for the littoral, that is the junction between the sea and the land, and the naval space. We're established with a somewhat standard venture fee model, with a 2 and 20 on an 8% hurdle. We have a published minimum subscription of 350,000 Australian, but at the discretion of the manager, we will and have accepted less. I am lead investor. I am contributing $6 million in line with the ES VCLP rules regarding max LP contribution. That is no more than 30% at any time of committed capital. So all my contribution will be in from the first close that occurs greater than 20 million. We would love to see you come on board for this excellent opportunity to access the defence asset class. There is a link here if you want to sign right up. We'd love to have you. I also look forward to taking any questions at investor@beatonzone.vc. Thanks for your time.